Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And this evening, I'd like to give you a brief update on what we see coming into October as USDA has released their grain stocks report, which tells us basically how much crop was left in storage as we go into the harvest season. Now, in this case, these reports are, this report is very valuable because when we think about, how our markets are reacting to the pressures we see, from example, from the drought and what we're seeing in the export markets, it does matter how much crop we're carrying over between crop years as we enter the harvest season, because that helps determine, if you will, how quickly prices will react as we move through time here at harvest. And so as USDA went out into the fields, or what they sort of found as they looked at the stock levels, is that they did find that, if you will, both crops are a bit smaller, but the idea is they also found that they need to make some adjustments to demand as well. So when it came to the corn market, what we found is for the 2022 crop year, so it'd be the not the right-hand column, but the one right next to it. The idea is they did make a few adjustments, not only to what we saw in terms of production in 2022, but they also adjusted feed and residual demand. And that tightened up the stock levels here in corn, came in a little bit below market expectations. And so we are seeing stocks that are a little bit smaller than last year, but realistically about the same size. On the other hand, when we look at the soybean crop, what we found was, again, a little bit smaller crop for 2022, but they also, again, adjusted demand. In this case, it was in the seed and residual that they adjusted. And in this case, they had ending stocks going up a little bit, but that again brings it roughly in line with what it was for the previous year coming out of the 2021 crop. So as you're looking at the data right now, here's what USDA found. As we're looking at stocks as of September 1, there was 1.36 billion bushels of corn still in storage. Again, a little bit lighter than what we saw last year about this time, but we also see a different mix in who's holding that corn now. There is much more being held on farm by farmers directly, and there's much less in the commercial elevator system. That's what that off farm number is showing us there. Now, as you can see here, there's still more being held in the elevators than there are in farm storage, but the idea is we did see farm storage go up while the off farm storage went down a little bit. As you look down at the bottom of the table, that's showing you the top 5 production states as we look down there, and what we see in terms of storage. And the idea is, you can see across Iowa, we saw more corn being held back across the board as we're looking there. On the other hand, states like Minnesota and Nebraska, smaller amounts being held in storage. Now, when we look at the adjustments that USDA made, what they ended up saying was that the 2022 crop was about 15 million bushels smaller than they had originally estimated. But they also turned around, this is where I'll have you jump down to the bottom line of the table there. They said, and in this case, they've labeled it residual, but this ends up being in the feed and residual line for corn. They said that that feed and residual usage was actually higher by 76 million bushels there. When you put those two movements together, that means ending stocks had to move by 91 million bushels, bringing it down significantly. And so we went from looking at stock levels that were going to end up a little bit higher than the previous year, and they came in now a little bit lower than that. But it still says that we're coming into this harvest season with over 1.3 billion bushels in storage there. You combine that with an estimated 15 billion bushel corn crop, you're looking at over 16 billion bushels of total supply then being available to the markets this coming fall. On the other hand, as we look at the soybean stocks table, the idea is we found 268 million bushels in storage as of September 1. Just like with corn, we saw more being held by farmers on farm and less being held in the commercial elevator system. But you can see here, much more is actually held there on the off farm storage than is in on farm. And as you look down below again, you can see the adjustments by each individual state. But the idea is, when it came to these stock levels and adjusting, the balance sheet here, much like with corn, We saw the soybean production for 2022 being lowered just slightly by about 6 million bushels. And again, the adjustments in what they call the residual category. In case of soybeans, this is seed and residual. And you can see they actually adjusted this from 24 million bushels to a -1. Now, normally when we see a negative number in residual, that means there's going to have to be some rebalancing happening here. But with it only being -1, I don't expect to see much movement in these numbers as we move forward here. Basically, USD's adjusted it basically down to zero here. So as you're looking at, again, the combination, the idea is we lowered production a little bit, we lowered usage even more. That ends up adding 18 million bushels to the ending stocks estimate. So what was 250 becomes 268. And in this case, this was a little bit higher than what markets had expected because we had been seeing these stock levels tighten a bit as we ended out the marketing year for the 2022 crop. Beyond that, what USDA also provided was a weekly snapshot of what's happening in the export markets. We continue to see the soybean market struggle. As you're looking here at the little red line down there with the 3 dots in it, that's the 3 weeks we've got so far in the 2023 marketing year. And you can see that our export sales are lagging behind not only the last couple of years, but our 5-year average as well. So we continue to struggle when it comes to the international marketplace. Corn is roughly in line with where we were at last year, but last year was a down year for exports. You can see well below 2021 and off our 5-year average as well. So our export markets continue to be a struggle as we're looking out there, even with the stock levels tightening up a little bit. We also see biofuels sort of, let's call it steady as she goes. And so the challenge of the markets right now is sort of dealing with this idea of that the crop size in 2023 still looks pretty good and that usage is steady at best and maybe still declining when it comes to the export markets. So when we're looking at pricing right now, compared to a week ago, what we had was a little bit of a rally midweek, and we gave it all back up here after we got the grain stocks report out there. So as we're looking at the 2023 crop right now, USDA has a price estimate of 490. The futures market is weighing in at about 470. So you can see that the market's a little more pessimistic about corn than USDA. Now, as we're looking out for the 2024 crop, you're seeing the markets providing some evidence of a little bit better pricing as we go out into next year's crop, lifting that season average price estimate up to around $5 a bushel. With soybeans, USDA right now is at $12.90 for the 2023 crop. The futures market is at $12.60. So again, the market's being a little more pessimistic here, and I think a lot of that pessimism, that's a hard word for me to say. But anyway, this negative, sort of bias, if you will, within the markets, I think is mainly being driven by the lack of positive news in the export markets. Now, looking out to 2024, we do see the soybean prices continuing to drop as we've got a estimate out there of 1224, and I think that's because the markets are preparing themselves for a swing towards more soybean acres as we look into next spring. And so that's sort of, if you will, a very quick snapshot of what we're seeing within the markets today. And as we're looking forward, now the challenge is, especially now that we got past the government shutdown, we're looking forward to the October WASDE crop production reports, where we'll continue to get estimates in from the field about how big these crops are. I think the challenge that the market is looking at is it does expect probably that these crops will shrink a bit as we move over the next couple of weeks, as it has been over the last couple of months within USDA's estimates. But the challenge is every time we see production shrink, we are also seeing USDA pull back on usage as well. And a lot of that reduction in usage has been in the export markets. And so that's why I continue to watch those weekly export sales as we move forward. So that's a quick summary of what's going on, at least here at the end of September going into October. Again, my name is Chad Hart, Extension Economist with Iowa State University. Thank you for your time today.